The type of investors that we might expect to be targeting us, at the first stage, we have the friends, the family, and the fools. These are beginners in terms of investment. Families and friends, they trust us. They can give us a helping hand as we start our business, our seed stage. Angel investors, these angel investors, they are looking for return. They are looking for multiple return on their investments. They can help us with investments that can range up to $500,000. But they are looking to have a return 3, 4, or 5-fold their investments in the near future. That is up to 3 years or 4 years maximum. As for the venture capital, these guys, they help us by joining forces with us and by being part of our company. They can become our partners. Venture capital, they can help us with money that can range from $500,000 and up to $10 million. So what they are looking for is totally different than what the angel investors are looking for. Venture capitalists, they can go for medium to long-term investment within our company. At a later stage, we have the private equity. As the company grows, as the company is getting bigger, we need to move from venture capital to private equity, starting having our own full-fledged partners until we get to issue our company in an IPO, to go into an initial public offering, and we have our shares traded in the financial market. As we were talking about the investments, let's get back to the investment stages to elaborate a little bit. In the seed stage, as we start our business, we have the friends, the family, and these so-called fools, and of course, not to forget our own private funds. So self-funding is important in the seed stage. At a later stage, once we grow in the coming years, we go into what we call a startup stage. In the startup stage, we start to need more money than can we afford and that our family cannot afford to provide us with. We have to get to angel investors and to venture capital. In the later stage, in funding and investment, the company is now well established. They need more money to grow beyond its limits, to go cross-border. We need venture capital at this stage. As we reach maturity, we need to go into our private equity, getting private equity from full-fledged partners with us until we get to the public market and the IPO or the initial public offering. These stages are very important. At each stage, let's look at how our company will evolve. In the startup or the seed or the launch of the business, we can start the business with only 3 employees, being one with 2 employees with us. This company, in the first year of its operation, we might get to $100,000 in terms of average revenue. In this, we are in the first year of operation. We need to look for opportunity to start our business, to meet new challenges in the market. We need to start looking at a team that will help us and stay with us to succeed. And to start, we have to start on a good pace. We must have a good business plan that will help us start the business and attract these investors at a later stage as we grow. Funding at this level is the seed capital from the friends, families, and the angel investors at a later stage. And of course, if we could get some government help, it will not hurt us. As we proceed into the 3rd year, the company has grown. We have now around 12 employees. We reached $1 million in terms of operation and production. During these 3 years, we can be considered as a micro business in the SME stages. Here we have to start establishing our brand for people to know us. We have to work on our operation to become efficient, reducing the cost of operation, and we start to market our product in order to well establish ourselves for the next step. Financing is important. We reach that level, we cannot go back. We need to get financing. And after 3 years of operation, already we have a background, we have financial statements, we can apply for financing from a commercial bank. Moving further into our 5th year, the company grew further. We are becoming an institution. We attracted talented people to join our company. We have around 50 employees now. We have turnover or sales figures or revenue up to $10 million. At this stage, 5 years in operation, we need to start looking at innovation, creating new products, new services to the market. Start to offer packages to attract more clientele. And at this stage, once the company grows further, we have to look very carefully at the HR that we have, at the human capital. Human capital is very important to start working on the pyramid, on the succession planning, to have a better established company to expand even further. Funding at this stage is important to grow cross-border again. We need growth funding from venture capitalists. Venture capital, as we said, it can help us with $500,000 up to $10 million, which can be enough for a small company to turn into a medium enterprise. Into our 10th year, becoming a medium enterprise, already we have around 100 employees, we have around 50 million in average revenue, and at this stage, we also have to work on innovation, introduce a new product, more services to keep and maintain our customers. We have to work on customer service. Getting customer is one thing, maintaining the customers is another thing, which is very important for medium enterprises to grow further at a later stage. Here, we have to concentrate on sales. Sales, sales, sales. This is what gets us the revenue. This is what gets us where we want to go. After 10 years, it is about time to start gaining leadership in the market where we are, to gain leadership in the market that we serve. Here, we have to go into a growth funding through private equity. Private equity are people who will share with us the success or the future success that we are looking for.